80, always streaming live inside your favorite app, your WDBO app, where you can listen to On the Money anywhere in the world, assuming it's Saturday morning and it's somewhere where you have internet or Wi-Fi, or, always get your news and traffic in there as well. This is a chance for you to hop on the air, hop inside the brain of one of the top 100 financial firms in the country. That, of course, is the Certified Financial Group office here in Central Florida. Over 417 years experience dishing out this advice. Over 30 years on the air, giving out some of the best advice to our DBO listeners, and they are the only financial call-in program of its kind. So if you want some great financial advice, this is the place to get it. Thank you so much. Right now we got Joe Burt and Harry Stadelmeyer joining us today. Guys, how we doing?
We're doing great, Josh.
Hey, Josh, welcome to Wisconsin.
Wisconsin. It's freezing outside. You're telling me.
How about that? What crazy weather are we having, huh?
Up and down, up and down.
Next weekend's supposed to be nicer.
Yeah, 80s next week.
Well, let's hope it doesn't get much worse than this. Anyway, Harry and I are here, as we have been, as you said, Josh, for more than 30 years, taking our listeners' questions that you might have regarding your personal finances. Monday through Friday, Harry and I and the 14 other certified financial planner professionals provide retirement planning and investment management for a fee, working with our clients as fiduciaries. But on Saturday morning, we are here for you absolutely free. So if you have any questions regarding your personal finances, decisions that you're trying to make regarding a mutual fund, regarding your IRA, or 401k, long-term health care, real estate, life insurance, all that and more, Harry and I are here to take your calls. And the good news for you is that in addition to the WDBO app, where you can just speak in there and leave a message, you can pick up the phone and dial these magic numbers, because there is absolutely nobody in line, and you could be the first in the line. So take it away, Josh.
You got it. The numbers to call are 844-580-9326. The numbers you can text in your question are the same numbers, 844-580 WDBO, and the app, like Joe mentioned, you can always send in your open mic. Just open up that free app, hit the open mic button down at the bottom, and send in your best 15 seconds of questions, and you'll get that same sweet, juicy financial advice you can always find here on WDBO's On the Money. Today's topic of the show: what are the lessons that we learned in 2023, and now what?
Yes, here we are. Usually January is a time of reflection, maybe. A time of looking forward and looking at the things we did right and things we did wrong in the previous year, and try not to make the same mistakes. Many people make resolutions to do more workouts or eat healthy or save more money. The lesson I think that I feel I learned or have learned, and I've done this with Joe now 30, going on 39 years, is literally 1 year ago we sat in many podcasts, seminars, symposiums with some of the greatest minds on Wall Street. They love to give their prognosis about, the coming year. In fact, we'll be doing that again here in the next couple of weeks.
And they get paid a lot of money.
Oh, they do. And they love coming to Florida. So we were sitting here last year, and the news was gloom and doom. It was not good. And we had just come off a 2022 that was really brutal. It was difficult. And so, the prognosis was 2023 is going to be, not any better. We're looking at inflation. We're looking at the Fed's raising rates 6, 7, 8, 10 times. We're looking at no wage increases. We're looking at slow growth. I mean, there were so many negatives that it kind of made you want to take your money and put it in the backyard.
Yeah. And during that time, we had a continuation of the Ukraine war. And then we had the Israel-Gaza thing flare up, right?
Yeah. It was not good.
No.
And so, the temptation was to get out of the plan, get out of your investments, get out of your 401k and move it to that nice 5% CD or money market account and kind of abandon ship. So here we sit in January of 2024, and we look back and we say, wow, what a phenomenal year. What a great year. So just because you hear the gloom and the doom and what's next? What's next is that you need to stay the plan, regardless of the information that and there's so much information out there, regardless of what you hear. If you have a plan in place, follow the plan, continue to follow the plan, because if you jump ship because of some nugget that you heard at a cocktail party, it could be financially devastating. And I know that, my moderate portfolios and moderately aggressive portfolios, and Joe, yours were double digits, and that was not expected. And what a shame it would have been to, sit on the sidelines and miss the run. That's why people don't achieve the goals that they set themselves financially, is because they tend to have knee-jerk reactions with their portfolios, and it's just not. Market timing doesn't work, folks. Yeah. It just doesn't work. So the lesson learned is, if you don't have a plan, you need to get a plan. And the second is, there's a lot of good information, but take it for what it's worth. And again, if you're on a course, stay on the course. Don't let information derail you.
I think the lesson there is, Harry, as we've always said, that diversification and quality will win in the long run. And it's never a smooth, straight line. You've heard me say this before. If dieting and investing was easy, we'd all be skinny and rich. But it doesn't work like that. You have to accept there's going to be periods of time when it's gut-wrenching. But our job is to keep you from blowing yourself up, and to understand that if you have diversification, if you have quality, it does win, and it does work. And that's the challenge to be a good, successful long-term investor. Now, by that being said, what you don't want to do is have everything invested, because you need to have cash on the sidelines to cover your expenses for a period of time. What you don't want to do is be drawing from your portfolio when things are down unnecessarily. And you want to have your portfolio built so if you need to take some money out, it's there, and you're not selling in a down market. And that's really the secret to planning, as you said, to knowing where you're going to get the money, how you're going to get the money, what kind of rate of return you need. So that's what we do as certified financial planners. We've been doing this now for nearly 50 years, providing financial planning, investment advice for our clients, not only here in Central Florida, but now in 36 states. And we're proud to have our WDBO listeners. And if you have any questions, and I saw we had a couple of texts pop in there, Josh.
We sure did. This one comes to us from Steve in Orlando. He sent it in during the 7 a.m. show this morning. He says, my dad left me 50 $100 I-bonds and 50 $50 E-bonds. E-bonds date back to the 50s and 60s. Jeez. I got our I-bonds in the 2000s. I'm lost as what to do. Steve.
Well, unfortunately, they stopped paying interest after 30 or 40 years, so they've been just sitting there dormant. Needs to go to the treasury.gov. And cash them in. You can put in the serial numbers, and they will give you a value. And then there's instructions as to how to cash those in. You want to send them certified mail, registered mail if you can, and that's what you're going to end up doing.
Yeah, because at this point they're not
earning anything.
They're not doing anything.
No.
I mean, it's paper that's so
right.
Yeah, takes a little homework. Aren't there some banks that may help you with?
They used to, and if any of our listeners know, we'd be eager to pass that information on. I know that in times past, the banks would do that for you. Yep. Oftentimes now you have to be a customer of the bank and jump through some hoops. But if any of our listeners, and we have great listeners throughout the WGBO listening area, have had experience with that recently, and we'd love to hear it for you. It's not an area that we deal in regularly, and so our job is to pass on this information. So, Steve, that's the best we can do this morning. We'll do a little research during the break and see what else we can find, but we appreciate your text.
Thank you much, text. And Steve, if you want to text in, the number is 844-580-9326, 844-580-WDBO. We got Bob that just rolled in, too. Do you want to get an answer from Bob?
Sure, let's do Bob.
All right. Bob says, I and my wife are 72 and 71. They are converting. They have a traditional converting. Let me start over now. They have a converting traditional IRA to a Roth. Everything's paid for. We do have traditional IRAs with Vanguard and 1.2 million regular savings account. IRA is 1.3 million. Roth IRA is 690,000. Here's the question. Am I too late to roll the money into a Roth, or should I just go ahead and tuck it away into the savings account?
I lost it. What money is he or she talking about?
Okay, so they have 1.2 million in regular savings.
They do. This is the call or the texter.
Yes, Bob.
1.2 million regular savings. Okay.
Yep. Mm-hmm. And it looks like Roth IRA is 1.3 million.
This is in addition to the 1.2.
I think I'm reading this wrong. Traditional IRA is 1.2.
Okay.
All right.
Savings account is 1.3.
Okay.
Roth IRA is 690.
That's what they own.
Correct.
Okay. Now they inherited on top of that?
I don't believe
no.
that.
I think what he's asking, the way I'm reading it, is they have 1.2 million in a traditional IRA,
and they want to
move that into their Roth. Is the way I'm reading that.
Yes.
I could be wrong.
Yes. And the answer is maybe.
Yeah.
Certainly you don't want to do it in one lump sum
No.
because you're going to end up giving away 40% of that to Uncle Sam and you'll never recover. What you want to do is look at what your tax situation is. You want to look at also depending on your age, because this can impact your Medicare premiums hugely. It could also impact the taxation of your Social Security. This is a case where you definitely need to sit down with a certified financial planner and have us go through it. Look at your current tax situation and look at the timing. We can build a graph to show you the appropriate times based on current tax laws or when to do those conversions and how much to do it. And the nice thing about our current system is that it's dynamic. So when tax laws change in the coming years, we just plug in the new tax laws. It happens automatically for you, and your plan is automatically updated. So this is what we do, and we charge a fee for this. We don't do this work for free like some folks in town want to give away the plan, and we know sometimes what those plans are worth. But as certified financial planners, this is what we do. Look at it in detail and can answer those questions. So you ask a great question, right, Harry?
Yeah, Bob has obviously done this with, I believe you said $690,000 in the Roth already. That may have come through a company plan and that they had a Roth option. And I've had a lot of listeners say, hey, I do have that option for a Roth in my 401k. Should I put 100% of that into the Roth? Again, there's some planning there. I believe that having a little bit in the Roth and contributing a portion of your 401k. Now it's not a pre-tax situation, but it does allow you to put some money aside that in theory, assuming they don't change the laws, in theory, you'll be able to pull out that money without any tax down the road.
Right.
So it looks like Bob has done that in the past to some degree, but it is a good strategy. But you also have to be careful because it could bite you.
Yeah. What I recommend is that you give us a call. This is what we do. Meet you in our office and be glad to quote you our fee, exactly what it takes. But I can guarantee you we will save you a multiple of our fee in tax aggravation and tax saving. So give us a call and we'd be glad to help you. 407-869-9800. And you can reach Charles Curry right now at our office at 407-869-9800. 9800, and you can discuss your situation in more detail. And I hear the music. Josh, so take it away.
That's right. That's one of the beauties of this show is if you're listening and you're like, yeah, this is good information, but I want to get down into the nitty gritty of my personal finances. That's the benefit of having Charles Curry standing by off the air. Just give him a call, 407-869-9800. 407-869-9800. If you want to call in right now, we got Larry and Apopka coming up after this break. The number to talk on the air is 844-580-9326. Same to text us, 844-580-WDBO. You're listening to On the Money, where we're planning tomorrow.
Today.
With the Certified Financial Group. To On the Money right here on WDBO 107.3 FM AM 580, always streaming live inside your WDBO app. Harry Stadelmeyer and Joe Burt calling in. They're sitting here in the studio, or they're sitting here on the radio show answering your questions as they do from the Certified Financial Group. If you want to get your question on the air, the number to call is 844-580-9326, 844-580-WDBO. You can go ahead and text your question in that way too. But if you want to learn some of the juicy knowledge they always have, they have these workshops that are open to the public or open for sign-up fees, and they're really, really, really great information there.
Yeah, they are, and Josh, they are free. We don't charge anything for these workshops. We have a nice learning center here that'll seat 30 plus people, and we fill those up. In fact, our next workshop, if you go to our website, unfortunately, our January 27th is already booked. So we encourage you to keep visiting the website on a regular basis because they do fill up. But our next available workshop is February 7th. 6:30 to 8:30.
It's a Wednesday night.
It's a Wednesday night. It's 6:30 to 8:30 here in our Learning Center. Charles Curry and Wynn Smith. It's a big topic. Takes two of them to wrestle this topic. It's called Getting Long-Term Care Planning Right. What a hot topic in today's world, and with the aging of America, and what are the options out there? They're getting less and less. Many companies are saying goodbye to the long-term care industry.
A lot of people think that Medicare will take care of you. When you have to leave the hospital. You've seen it, Harry. I've seen it when you pull up the hospital. There's people that are sitting there in the wheelchair waiting for the other car to pull up and take them home or take them somewhere. Because hospitals today are incentivized to get you out the door. Mm-hmm. And once you're out the door, then you're on your own. And if you need skilled nursing after that, where do you go? You go home and hope that your spouse or your significant other can take care of you and do all that stuff that needs to be done. And if not, what are those options? Medicare will cover that for a period of time. But if you need continuous care, what are the options that you have to you? So Charles and Wynn will be covering that from 6:30. I think it's 6:30 to 8. February. I think it's 6:30 to 8. Okay. We'll double check that time. But anyway, we do know it's February 7th. It's a Wednesday evening. Go to our website. That's financialgroup.com. Financialgroup.com. You can make your reservation right there.
Yes, and then the next one would be February 24th if you want to go into late February. And that is also hosted by Gary Abley. That is a Saturday morning, 10 to 12. I would encourage you to sign up for that if you're interested. And the topic there is, will your savings last a lifetime? And this is really a planning discussion about how much money do you need to retire? What's your number? I always tell clients, do you know what your number is? When you call it quits, when that paycheck stops, how much money do you need in your piggy bank to last a lifetime? Well, how many people do the yellow pad? Well, I've got X amount of dollars and I spend this much. Oh, I'm good. Well, we forget about inflation. We forget about taxes. We forget about a lot of things. And so this is, Gary's going to do a deep dive into, will your savings last a lifetime? Excellent seminar, workshop. Again, it's free. It's here at the Learning Center, and we encourage you to go to our website and get signed up for those.
Take it away, Josh.
If you want to hop on the conversation, 844-580-9326. Larry, Dave, you're coming up next. You're listening to On the Money, where we're planning tomorrow.
Today.
With the Certified Financial Group. Welcome back to On the Money right here on WDBO 107.3 FM, AM 580, always streaming live inside your WDBO app. This is your chance to get your questions answered about your financial future, because your favorite financial program, On the Money, is here answering your questions. Harry Stadelmeyer and Joe Bird with the Certified Financial Group answering your questions live on the air. But if you got a question of a more personal matter, more specific finances, we do have Charles Curry standing by in the office. That number is 407-869-9800. But the number to call in right now to get on the air is 844-580-9326. Same number to text in, 844-580-WDBO. Let's head right to those phones where Larry is calling in from Apopka. Go ahead, Larry. You're on the air.
Hey, Larry.
Hey, good morning. Thank you for everything you've done over the years. I've gone to your seminars and everything and listened to you guys.
Well, thank you very much.
Yeah, thanks for the support, Larry.
My question is, so I went to go with each of the grandchildren. We have 3. When they turn 13, give them $1,000, get them into the stock market. Mm-hmm. And, part of their project will be to research the stock market. What is it? What can it do for you? What are the pros and cons? But it's how do I structure it so that it's not counted for income when they start going to college and stuff.
How much are you going to give them? You said $1,000?
Initially $1,000, and then let them figure out to help grow it. Of course, working with them and everything.
Yeah, you don't have to worry about college, and that's a small amount. But what your bigger question is what are you doing in terms of the specific investment? What have you looked at? What have you considered? What are you thinking?
Well, that's where I want them to do the research, where they want to put the investments. Like, I have like 5 people that I know that have done pretty good with the stock market that I'll have them go talk to them.
Got it.
And get ideas and suggestions from them. Mm-hmm. And then let them pick 4 or 5 stocks or blends or something like that.
Right.
And then help monitor it with them to make changes and things like that.
But it'll be
put it under
right. Well, if they're under the age of 18, you're going to need to set up what's called a UTMA account, Uniform Transfer to Minors Act account. Are you familiar with that?
No, not at all.
Okay, it's an account that should be set up for a minor, because if you're under the 18, you can't own stocks or mutual funds, and it's an account in their name. They know what's in it, but you're the custodian for it, and you'll know what's in the account and what they're doing with it. So you'll probably want to do that, and you can keep that in the account until they're age 25. When they turn age 25, right, Harry?
Yeah, at age 25, it has to revert to their name. So, but up until that point, Larry, you're in charge. So if all of a sudden this child turns out not to be the sweet grandchild that you thought you can still pull the plug.
Right.
But after 25, it's theirs.
And for college purposes, it won't count because you're still in charge. You can pull the plug anytime you want. So it's not really their money.
So
go ahead.
So in respects, I'm the custodian.
Right.
And then they're the beneficiary.
That's
when
correct.
They turn 25.
Yeah, that's correct.
It's called an UTMA account, Uniforms Transfer to Minor. If you go to Vanguard or any of the Fidelities and you just Google UTMA or plug in UTMA, it'll give you a nice definition. But that's the right way to set this up for the grandkids. And I would be careful about getting into individual stocks. Everybody wants to tout stocks. We're big believers in mutual funds that, you can own 100 stocks versus one individual because, out there is the big seven, as they call it. And sometimes some people think those might be overpriced. But, it's certainly a great project for the grandkids to, kind of kick off their investment career, if you will. But we're bigger believers in mutual funds than buying an individual issue, and it's a little easier.
But if you're trying to educate the children about what the stock market is all about and valuations and all the stuff that needs to be done when you're picking individual investments, that's a great way to do it. Used to be in times past that people would buy a share of Disney
and just hold it.
And the beauty of it was that you actually own the certificate. And those certificates today are worth more than the share value simply because of the collector value. But you can't do that anymore. But you're right. It's a great way to teach the kids of American capitalist system.
Yes. By the way, those certificates were gorgeous.
Right, they are. Right. Yeah.
There you go.
I've seen them. Yeah, gold and blue, and they are nice. Go ahead.
And my plan is to kind of really guide them to the small caps, the big caps, and stuff like that.
Okay.
But one of the people they're going to talk to is his uncle, and his uncle kind of plays the market, and he goes into specific stocks, holds them, then sells them, and kind of see the advantages and disadvantages of that. And actually, his uncle has done quite well at it. But my thing is just like my 401k is set up. That to go into the blends and the mixes and those life care 2025s and stuff like that. So.
Right. But I think that's great, Larry. Once again, talk to whomever you're going to do business with about setting up the UTMA account for them, and you can plug in the account. You can see it on the computer, and they can fool around with it, but they shouldn't. But you're really the custodian, so.
Right.
Yeah.
Right. Yeah. And what are the initials again?
UTMA, Uniform Transfer to Minors Act in Florida, it's called. You can Google it, UTMA Florida. Tell you everything you want to know.
Okay. Thank you very much, guys.
You're welcome, Larry. Have a great weekend. Thanks for the call.
Hey, bye-bye.
Bye.
Thank you, Larry. If you want to hop on the air, 844-580-9326, 844-580-WDBO. Let's stick to the phones where Dave is calling in about a Roth IRA inheritance. Go ahead, Dave.
Morning, Dave.
Good morning. It's not a Roth. It's just a regular IRA. My mother passed in October, and myself and my siblings inherited the IRA. And my question is, I got two different things in my research on the on whether both say I have to withdraw it within 10 years. One says I can take out any portion at any time as long as I get it all out in 10 years. And the other thing says if my mother had started RMD on it, then I have to continue RMD.
That's correct.
Yeah. How old was Mom when she passed?
Mom was 93.
Yeah. So I'd say she was taking RMDs, or at least I hope she was.
Yeah. Right.
She did. She did. My sister says she took RMD last year. I know of.
Yeah.
She did take out whatever.
Yeah.
So I have to. I do have to take out something each year.
Yeah. That's correct.
Okay.
And you got to have it drained within 10 years.
Yeah. I knew the drain within 10 years, but I thought I could take it out at any time over that 10 years.
When that law was first passed, the IRS didn't know what they were doing. They didn't. It went back and forth on it. But the current rule is that because she was already taking RMDs, right, Harry?
Yeah, that's correct. And if you stick to just the RMD distributions, and you do the math, obviously it will not. The numbers don't make sense for it to be drained in 10 years. So you're going to have to accelerate that
in the 10th year.
In the 10th year. So if you're left with this IRA and there's 40,000 in the account, you're gonna need to pull that out and pay taxes. That was the idea, which I still can't believe. Yeah. It blows my mind.
I presume, Dave, that the IRAs are already being transferred to your name and your siblings' names as beneficiary IRAs.
Yeah. Some of my siblings just took the money out or taken it out over the next couple of years. My brother and I took a small portion in December, but we had planned on taking it maybe 4 or 5 years down the road.
Got it.
Taking out with when we retire, then our income would be lower, and
Sure.
that would be a good time to take it out.
That makes sense.
But since I have to take out, how do I find out what the RMD on that is? Or
Your custodian.
do I start a new 10-year thing? Or
Yes. No. You said
so-
you said start a new 10-year thing.
Yeah, do I start a new 10-year RMD, or am I using, if she when Mom started the RMD, am I just continuing on with the amounts that she took out?
Yes, yeah. The amount that she was taking out is what you should continue. I believe the 10 years is reverts back to the year she died. So she passed in October of 2023, correct?
Correct.
Okay, so that's your 10-year. That's kind of your 10-year window. But your RMD will be established by the value of the account on December 31st, and there's a calculation. But as Joe said, your custodian should give you that number, or it's
Right.
easy to find on typically on the website or state. Are you dealing with the Fidelities or the Schwabs of the world, or
American Century.
okay. So that they should have that information for you.
Okay, because I looked on their site, and my information was their site indicated 10 years. Any time they said something about the Secure Act.
Yep.
January 1, 2020.
That's if she hadn't been taking RMDs.
Right.
Okay.
That's
But
the
since
key.
she
That's
was-
the key there.
That's the key.
Okay, but I still have 10 years, even though she had started taking.
But you have to continue the RMDs, but it has to be drained within 10 years.
Right. Okay. So I got 10 years. I just have to do a different. I don't have 4 years left if she's
Right.
taking it for 6 years.
That's
I
correct.
still
Oh,
have
that's
10
correct.
years.
Yeah. No.
Okay. Okay. Great. Thank you very much.
You're
All right.
welcome,
Good
Dave.
luck.
Thank you for the call. Have a great weekend. All right. And we have another text question that floated in, right, Harry? You got that, Josh?
I got it right here. If you want to get your question texted, go ahead and text 844-580-9326. We'll do a quickie right here. My husband and I have vowed to get our, quote, ducks in order for 2024. What advice can you give us, and where do we begin?
Here's the proverbial, we want to get our ducks in a row for 2024. I think where we start, one of the most important aspects of looking at forward and doing the right things in 2024 financially is start with your debt. Making sure that you understand your debt, making sure you understand what those credit cards may be charging you. Sometimes that's a shock when you start looking at 21, 22, 23%. Get a handle on your debt. That's most important. Then next, take a look at your expenses. Time and time again, I have folks come in and I ask them a question. I said, so tell me a little about your income. And they rattle off, well, I make X amount. Now my wife makes X amount. We have this coming in and this coming in. And the next question is, tell me about your expenses. How much are you spending a month? And it's a blank stare. It's unknown. Well, we think, get a handle on your expenses. How much are you spending each and every month? There should be a number that you could, put on paper to know that if there's a hole in the boat, you need to plug that hole. Something that we have here that I'm willing to send to any listener that's interested is our infamous blue form, right, Joe? We've had that for years and years, and
It's an eye opener.
it is a very big eye opener. If you want to just email me at harry@financialgroup.com, I'd be happy to send you a PDF form, and it has all the expenses that you might be spending in a month. But getting a handle on your expenses, then also look at your 401k. Are you maxing your contributions? Are you doing everything you can to save money? And then also making sure that your will's in place, updated. those are just kind of 4 or 5 things that you really, really need to look at as far as getting your ducks in order in 2024. And the best advice to me is, if you're going down this path, find a professional, get yourself a plan if you don't have a plan, because if you fail to plan, you plan to fail.
Well said.
Thank you so much, Harry. Joe Burt, one more segment coming up after this here break of On the Money. If you want to call in, 844-580-9326. And we got Charles Curry standing by off the air for any specific questions you may have about your personal finances. That number is 407-869-9800. You're listening to On the Money, where we're planning tomorrow
Today
with the Certified Financial Group. Got a different number, so you can call Charles Curry if you have any questions for the brief couple minutes after the show. 407-869-9800. 407-869-9800. And Joe wanted to clarify a little bit on an answer provided to Steve earlier in the
Well, I want to give him more information. Steve called earlier, and he inherited some savings bonds and I bonds years ago that were purchased years ago, and unfortunately, after a period of time, they stopped paying interest, and so you're not making any money on them. They just are what they are. Where do you go? Well, you can try your local bank. Some banks will do it for you, particularly if you're a customer, but they're doing that less and less. The better thing to do is maybe go to treasurydirect.gov, treasurydirect.gov. All the information is there. Tell you what forms to fill out and how to get your money from the Treasury Department. So that's for Steve. Steve, I'm sorry, I didn't know that right off the top of my head. We did talk about going to the bank, but we weren't sure, and we did mention the Treasury, so that's an option.
Have you been in the bank lately?
Nobody goes to the banks anymore.
They don't.
That's why you're seeing few and fewer of them. Yep. If I've got a deposit, I take a picture of the check, and you do the same thing. Yeah,
yes.
yeah. So the world is changing.
Yeah.
We've got, once again, Charles Curry taking calls off the air, and I want to talk about Score My Funds, Harry.
Yes. What an opportunity for you. If you're looking at your portfolio, your mutual funds, your investments, and you're wondering if if they're the best that they could be, we actually have an opportunity for you to log into scoremyfunds.com, I believe it is. Yeah, scoremyfunds.com, and you just put in the ticker symbol, and we will rate and score them based on our little scoring system to let you know if they are top performers, if they are something that we would recommend. And it's a way for you to really get a portfolio evaluation for free. We're not going to charge you anything, but we will give you our honest opinion based, again, on our criteria. And that is, again, another free service that I think if you have a portfolio, certainly should take care of. And we've had some good portfolios come in, and then we've also had some that were maybe questionable, maybe not the best place to be.
So it's absolutely free. Go to scoremyfunds.com, scoremyfunds.com. So all you have to do is put in the ticker. If you don't know the ticker, there's a pull-down menu that you can find the ticker, plug it in there, and we will get you an answer within 48 hours. And we will, as Harry said, score that fund for you based on a scoring criteria developed by the Center for Fiduciary Studies. It's totally unbiased, and it'll tell you the quality of your fund measured on 11 distinct criteria, everything from expenses to risk to how much reward you're getting for the risk that you're taking with that investment and so forth. And if you want to take it one step further, we can then tell you, based on what you're holding, how much risk you're actually taking based on your own criteria. So if you're interested in doing that, we can follow up with you as well. It is absolutely free. We've been doing this for our clients now for several years, and have had a lot of clients as really thank us because they never really knew what they had until they saw the score. So I hear the music there, Josh, so you can take it away, buddy.
Thank you so much. You just listened to a great episode of the Certified Financial Group's On the Money, where we're planning tomorrow
Today
with the one and only Certified Financial Group.